Hi, this is Michael O'Leary from By the Book Taxes with this week's installment on tax resolution blogs. Last week we had a pretty big presentation on a concept called reasonable collection potential, where the IRS figures out how much a taxpayer can afford to pay on a monthly basis in order to clear up their tax debts. It was an overview. There were a lot of components in that calculation. So over the next several weeks, I'd like to take several of those components, go one at a time, and do a bit of a deeper drill down. So today, we're going to be talking about allowable living expenses and how the IRS determines what you can count as living expenses toward the calculation of figuring out how much you can pay them back on a monthly basis. Okay, so that's the question. In determining how much you can repay the IRS on a monthly basis, what will they allow you to claim in monthly living expenses? As we all know, living expenses vary greatly depending on what part of the country you live in. Northeast, expensive. Out west, expensive. Urban, expensive. Rural, maybe not as expensive. Smaller cities, maybe not as expensive. The IRS uses statistics on living expenses gathered by the Department of Labor. And these statistics are used to develop standards, local standards, regional standards, and national standards for cost of living. And then those standards are used in determining how much a taxpayer can afford to repay the IRS on a monthly basis, depending on which region of the country they live in. These statistics are published in a publication called IRS Publication 55B, the Data Book. The Data Book comes out toward the end of every March, and it is for a year, more like a fiscal year, not a calendar year, from October to the next September. So the 17 book, which is in practice now, contains statistics for October 1st of 16 to September 30th of 17. At the end of March 2019, the 2018 data book will come out, which will have the statistics from October 1 of 17 through September 30th of 18. And whatever filings you are doing for tax resolution, you must use the new standards in the new book once it comes out. But up until the end of March, you can use the standards in the 17 book. Okay, here's an example of what I'm talking about. These are the different living expense categories that the IRS uses. And first of all, I want to give credit where credit is due. This chart comes from a book by an attorney who's very prominent in this field. His name is Eric Green. He works for a firm in New Haven called Green and Sklar's, and they basically taught me just about everything I've known about tax resolution. Eric's book is called The Accountant's Guide to Resolving Tax Debts. He actually has two books. The first is The Accountant's Guide to IRS Collections, and then the second one is The Accountant's Guide to Resolving Tax Debts. This chart comes from pages 24 and 25 of the Guide to Resolving Tax Debts. For anyone who's interested in learning more about this, I really recommend that they buy his books and read them. Wealth of information in there. So once again, these are the expense categories, and here are the standards that the IRS applies. Depending on which category it is, for example, food, clothing, miscellaneous, they use the national standard. For housing and utilities, the lesser of the actual expense or a local standard, and you can follow them all the way through, either a national standard, a local standard, or your actuals. And once again, this information is also in the IRS data book, publication 55B, but I wanted to give credit to Eric and his book. So if you have any questions about any of this stuff, if you have years of unfiled tax returns, if you have unresolved tax debts, if you are getting nasty grams from the IRS or a state, please write down this contact information. Please call me. I can help. Talk to you next week. Have a great week. Take care.